Welcome to the 7th EY Fintech Australia Census launch. We're proud to be collaborating with Fintech Australia on this significant research and to share the 2022 findings for the first time today. My name is Malia Fauna and I'm a partner at EY, specialist in government and investment incentives, and the EY Startup and Entrepreneurship Leader. I am pleased to be here today to facilitate today's discussion. I would first like to acknowledge the traditional owners and custodians of the lands on which we are taking part today, and to pay my respects to the elders, both past and present. I also acknowledge the important roles of Aboriginal, Torres Strait Islanders and Māori people within EY and the communities we all work within. Today, we have a panel of industry experts speaking, and we have hundreds of registered participants. We would like to make this as interactive as possible, and we will be welcoming your participation and your questions. Our agenda today is that we will have a brief welcome from Dominic Pine on behalf of Fintech Australia, a short keynote presentation from the Honourable Minister Husic, a census overview presentation on the 2022 research, followed by the all-important speaker panel Q&A on the key census themes and data. But before we begin, a few housekeeping items. At the bottom of your screen, there are multiple application engagement tools, which are all resizable and movable. Feel free to play around with them and move them around to get the most of your screen space. You can also expand your slide area or maximize it to full screen by clicking on those arrows on the top right-hand corner. If you do have any questions during the webcast, you can submit them through the Q&A engagement tool. We're going to try and answer your questions during the webcast, but if we do run out of time, it will be answered later via email. Please note that this webcast is being streamed and there is no dial-in number, so some networks might cause slight delays with the slides, so it's been suggested to log off of your VPN if you're on one. Well, that's enough of the housekeeping items. Let's move on to today's webcast. I would now like to welcome Dominic Pine on behalf of Fintech Australia. Welcome, Dom.
Thanks, Malia. Hi, everybody. I'm Dom Pym. I'm a board member at Fintech Australia. And although I'm probably most well known as the co-founder of Up, Australia's leading digital bank and most loved bank, I also co-founded Pin Payments, which is now part of the Checkout Group. And through my family office, Euphemia, I work with many different founders, particularly supporting women and underrepresented founders, try and balance the ledger in the industry. And I've also invested in more than 40 startups, which are mostly fintech, but also some climate tech, and around 20 different funds from crowdfunding, angel investing, seed funding, through to debt, secondary, private equity and VC. So very active in the industry, and Fintech Australia have asked me to do a brief introduction today. Fintech Australia is actually the peak national body, and we're committed to advocating on behalf of our members, the entire industry. We're thrilled that EY Australia has continued its successful collaboration with us and the fintech community to deliver this very important piece of research and this cumulative data set for the 7th consecutive year. It's amazing, 7 years goes so fast. The census remains the only detailed industry-backed analysis of the Australian fintech industry. And the research initiative gives sort of hard data as well as credible insights into how our collaborative efforts of fostering the fintech industry, and it's emerged as being one of the most important fintech ecosystems in the world. The census gives us fine-grained detail about the established and emerging subsectors within fintech, and also helps us to track the industry's increasing maturity in terms of company size and revenue, and to back the advocacy work that we do in driving the industry's ongoing expansion. The report's also arguably the source document to define the overall shape of the Australian fintech industry and how we differentiate from overseas markets. And so we hope you all enjoy reading the census report and getting to learn about the broad and dynamic fintech industry that we have here in Australia. Of course, I just wanted to thank all of the fintechs that participated in this year's census and acknowledge that over the past 7 years, the market has undergone significant change. Malia mentioned earlier that we didn't call it fintech when we first started. The Australia's sort of vibrant fintech industry has demonstrated resilience, rapid growth, and it's achieved international success in that time. And the insights from the census actually help us to better understand what we as a collective can do to support further growth, collaboration and innovation within the sector, but also within the broader economy. And in line with some of the insights from this year's census, Fintech Australia team and the board of directors have actually recently committed to the banking and finance oath. I thought it was worth mentioning. It's part of the Ethics Centre, and the oath is a pledge of integrity and commitment taken by individuals within the industry with the aim of helping to create a more just society and a more sustainable future. Good faith, honour and trust are some of the core principles upon which the oath is based, and it provides a foundation upon which we continue to build a robust, successful and ethical fintech industry. So we'll convene the broader industry to build toolkits, share insights, best practices, and develop key frameworks to be shared amongst our members. And we'll also champion policies that enable faster and more effective change. And this will all be the new bar that we set for ourselves and for the industry to build an ethical, sustainable and inclusive world. I look forward to discussing some of the findings from this year's census and also doing an interactive Q&A with the panel a bit later today. And I hope everyone gains some valuable insights. Thank you to EY again for supporting Fintech Australia for the 7th year in a row, and also to Visa and Austrade for sponsoring the census. Back to you, Malia.
Amazing. Thank you, Dom. I would now like to welcome our special keynote that's been kindly shared from the Honourable Minister Husic.
Thanks for asking me to do this and send this short message, because fintech plays a really important role in the success of Australia's tech sector. In fact, it plays an important role right across the broader economy. We've got one of the fastest growing sectors in the world, and it's poised for even greater international expansion. As the EY Fintech Australia Census highlights, the digital acceleration triggered by the pandemic is helping drive fintech innovation. And that rapid growth is leading to revenue generation from overseas markets and, importantly, creating new jobs. We've seen fintechs innovating with payments, wallets and supply chain solutions as more businesses and consumers embrace that vital transition to digital. We've moved from cash to card to phone and watch seemingly overnight. We're the global first movers, and we remain world leaders in the use of new payment technologies. And let me tell you, the government recognises the importance of fintechs. You provided new perspectives, new ideas, novel technologies, and you're also generating high-value jobs that improve economic performance and help maintain Australia's high standard of living. Australia's tech sector has experienced huge growth in the past decade. In fact, it's our 7th largest employer. 1 in 16 Australians work in the sector. 100 tech companies valued at over 100 million have been created. And the sector's goal is to contribute $250 billion to Australia's GDP. And the Albanese government is supporting that ambition with our own pretty ambitious target to have 1.2 million people employed in the sector by 2030. Those sort of targets need a plan, and we've got one. Our budget creates 465,000 fee-free TAFE places and 50 million TAFE technology fund to improve IT facilities, workshops, laboratories and telehealth simulators right across the country. It'll deliver up to 20,000 new university places targeted at underrepresented groups in areas like engineering and tech. And we're working across the trade, industry and home affairs portfolios to attract the right investment, skilled labour and, importantly, the talent we need for the tech sector to thrive. We're also working alongside industry unions and others to develop options for a digital apprenticeship model, bringing more skills into the sector. I also want to point to the work we're doing to deliver our flagship $15 billion National Reconstruction Fund to help support innovative companies, including those in fintech, to thrive. We're going to continue supporting Australia's fintech sector and attract record investment, talent and create more jobs here in Australia. We're world leaders. Let's stay there. Thanks for your time and all the best.
Thank you, Minister Husic, a long time and wonderful supporter of technology, innovation and the entrepreneurial ecosystem. And we, together with industry, look forward to continuing to work together with him and the Albanese government. So before we get to the panel, I would like to share with you the highlights of the 2022 EY Fintech Australia Census data. The 2022 census shows that although the fintech sector is robust and continues to grow, we do expect changing market conditions to impact the sector. Whilst the data has shown us that fintechs are reporting some challenges around capital raising and skill shortages, there continues to be a strong appetite for overseas expansion and greater collaboration and partnership across the ecosystem. So let's take a look at some of those highlighted results. Australia's largest fintech segments continue to be payments, wallets, and supply chain, followed by lending, business tools, wealth and investment, and data analytics or information management. That said, the percentage of fintechs involved in wealth and investment, while still relatively small, has increased by 7 percentage points in the last year, which is significant, 24% versus 17% in 2021. As robo-advice, micro-investing, crypto, CDR, and ESG investing take off, we do expect to see wealth tech increasingly deployed in the hands of Australian financial advisors and consumers, probably like you all on the call today. Notably, wealth tech accounted for 5 of the 29 Australian fintech seed deals in the first half of fiscal 2022. New South Wales and Victoria states remain the popular home for fintechs at the combined total of 76%. And it's great to see the spread of fintechs headquartered in Queensland and the rest of Australia growing. The age of the companies also demonstrate maturity. 89% have now been in existence for 2 years or more. Despite headwinds, we are seeing more fintechs post revenue and fintech profitability being maintained. This year's census found 4 and 5, or 78%, of the fintechs surveyed at post revenue, which is up from 70% in 2021. The number of paying customers continues to increase year on year among post-revenue fintechs, with 45% reporting more than 500 customers, which is again up from 41% in 2021. Census data, time and time again, tells us that fintechs are natural exporters, creating products and solutions for global markets from day one. According to this year's data, of Australian fintechs that generate revenue overseas, 43% earn more than half of that revenue from overseas sales. With cracks appearing in the capital raising landscape, fintechs need longer cash flow runways and convincing sustainable growth narratives to sustain funding. The last 12 months saw a steady level of successful fintech capital raised, with 45% of respondents raising more than $10 million, which is in line with 44% in 2021. But the proportion of fintechs exceeding their capital raising requirements has decreased from 21% in 2021 to 17% this year. Payments, wallets, and supply chain fintechs were the most successful, with 21% of this segment raising more than $100 million, compared to the 13% sector average. Outside of founder funding at 54%, capital raising was largely from venture capitalists at 33%, angel investors at 32%, and strategic corporate investors at 29%. However, reliance on founder funding is waning, and the interest in and use of alternative funding, including government grants, is increasing. Half of fintechs, around 54%, surveyed reported private funding from founders, compared to 75% in earlier surveys. 1 in 5 cite government grants, including the R&D tax incentive, as a source of funding, highlighting the importance of the R&D tax incentive as part of the funding for growth equation. The top 3 success factors in raising capital are uniqueness and clear benefits of the product and service offerings, and demonstrating the revenue trajectory and projection. In terms of barriers raised in capital raising, 46% report finding the right investors remain challenging, especially for the early stage startups. To keep this important growth sector on track, the ecosystem as a whole must rally, with government insistence that we've heard from Minister Husic poised. It's needed to sustain growth and attract investors. 79% of fintechs say the R&D tax incentive improves the sustainability or growth of their business, and 72% say it encourages onshore operations. To help the fintech industry thrive, respondents believe the new federal government should focus on greater founder and startup support via incentives, 43%, supporting greater capital flow for investment, and greater support for tax incentives and grants for Australian-based R&D and commercialisation. We asked what specific initiatives the industry believes would best help grow and support the fintech industry. The most common suggestions included making the R&D tax incentive even more accessible to startups, having greater non-dilutive incentives like other tax incentives, concessional loans, or other grants, and reducing payroll taxes for new hires to help combat big tech's open checkbook talent approach. Lastly, with the rising importance of environmental, social, and corporate governance, or ESG, we brought green fintech into the census for the first time in 2022, with 42% of fintechs saying in this year that they are either currently measuring their business sustainability or carbon footprint, have a sustainability goal, or have implemented some sustainable business practices, and we'll continue to monitor this trend. Consistent with broader Australian industries, fintech said the top 3 challenges or inhibitors to attracting and retaining talent are rising employee salaries at 66%, access to skilled domestic workers at 58%, and competition from big tech, 52%. Consistent with 2021, the scarcest areas of talent across the industry remain engineering and software, data engineering and data scientists, product management, and sales, with those stats you can see on your screen. Fintechs largely encourage remote or hybrid working models, whilst the vast majority, at 87%, have a physical office location. Only 8% actually support purely office-based work. Diversity is an identified area of improvement, yet again. Female representation does remain stable, but with more work to do at all levels across the sector. 34% have female representation in the sector, 28% in leadership, 28% of founders, and 25% at advisory board member level. Culturally and linguistically diverse participation in the fintech sector is pleasingly increasing at 28% versus 25% in 2021, and we hope and do expect that this upwards trend will continue. Now, on to the main event. I would like to introduce our impressive lineup of panelists for a discussion. Firstly, May Lam. May is an EY partner and EY's fintech and payment leader. She has over 20 years of founder, industry, and technology consulting and leadership experience. David Camilalago, who is the Global Head of Technology and the Manufacturing Centre of Excellence for Austrade, and thanks to Austrade for yet again supporting the 2022 census. Kim Teo, the CEO of Mr. Yum. I'm sure you've all used Mr. Yum over the past 12 months. It's a revolutionary mobile ordering payments platform that is used by more than 70 million global users and more than 5,000 venues globally. Kim and Mr. Yum secured a record-breaking $89 million to launch Shopify for restaurants globally, and the 3rd largest Series A in Australian history, and the largest for a female-led company. Kim's also promised she's going to try not to swear during today's webcast, and will make this fun and informative. She's a legend. Dominic Pine, who you met earlier, what he didn't mention is that he's also the Australian Fintech Leader of the Year 2022. An amazing wealth of experience. And Anthony Jones. Anthony's the Head of Innovation and Partnerships Australia, New Zealand and South Pacific at Visa. And a big thank you to Visa for supporting the census for the first time in 2022. Now, let's warm up our panel. The first question I'm going to pose to all of our panelists, as a general observation, what insights did you take from this year's census? Now, let's start with David from Austrade. Welcome, David.
Yeah, thank you, Malia. Appreciate it, and thanks for the opportunity to join this panel. And it's great, it's great to see the results. And Austrade is obviously, very keen to continue to support this the great information that comes out of the census. So look, it's there's so much that has come out of this data. I'll just try and highlight a couple of things. I think the maturity of the sector is really noticeable. Which is probably indicative of what we're seeing more broadly across the technology sector here in Australia. We're seeing more and more unicorns being developed. The number of companies that are post-revenue, 78%, I think really stood out for me and probably highlighted a bit of a bounce back from COVID. I think the numbers, I was looking at the numbers you were just showing, show that they had dropped to about 70%, which is, I guess, shows the resilience of the sector. It was also interesting to see that fintechs view the biggest competitors are other fintechs in Australia, which may be a sign about we're starting to see a little bit of saturation here in the market as well, which I know we'll have the opportunity to talk about, other opportunities internationally for fintechs to generate revenue. And I think the international competitiveness, also really stood out, and I look forward to, having that discussion a little bit later on today.
Fantastic observations, David. Thank you. And Dominic, your key insights and takeaways.
One of the most surprising things for me was the distribution of fintechs within Australia, and the dominance of New South Wales it was a little bit surprising. I do try to keep in touch with as many founders and fintechs across the nation. And we have a very strong and a more diverse group of founders now than we definitely did 7 years ago. So I think that's very interesting. I think the ongoing trend of diversity, both female leadership, such as Kim and others, but also that sort of more diverse involvement from people really across different cultures, different backgrounds. That diversity has continued to increase, and I certainly wasn't surprised by that, but I was very happy about that. And I think that with that diversity comes a different way of thinking. And a more competitive and collaborative opportunity for the industry moving forward. So I think there are probably a couple of the things that really jumped out to me in looking at the data.
I couldn't agree more, Dom. Thank you. And Anthony, your key observations, please.
Thanks, Malia. Firstly, what I would say is that the payment sector is still really hot. So despite the fact that it's become increasingly difficult to raise capital, what we have seen is that payment-focused fintechs are still raising substantial sums. But the two main observations for me, and we're a network business, of course, is that the fintech innovation has driven new experiences within the payments ecosystem. So I think there's still a lot of keen interest on how we can improve consumer and small business experiences. And then that second observation from my perspective is the importance of hybrid working. So with 87% of fintechs having a physical office, and yet only 8% of them are actively working only out of the office, kind of indicates how important it is to build a really good hybrid environment for attracting, essential really, for attracting and retaining key talent for fintech businesses. So those are the key ones from my perspective.
Amazing. Thank you, Anthony. And Kim, your key observations, please.
I thought a couple of things. The census highlighted that funding rounds had remained stable, and I just thought that was a phenomenal achievement for Australian startups, because that would be outperforming the global slowdown if that was the case. When we were raising our Series A, we definitely noticed that global investors were paying attention to Aussie companies, so not super surprised anecdotally, but that's an awesome achievement and an awesome sentiment. I was surprised that the ESOP program, as a way that government can help with startups wasn't featured in the census. Ownership is a big differentiator between working at a startup and not. And the Australian ESOP program was revised on the 1st of October, but it's still, I don't think it was what startup founders would have liked to have seen from that revision, and it's still relatively onerous and not very well understood. And there's a lot of confusion about how to best apply that program, or how to best utilize that program in our world. So yeah, I thought that was a miss from the report. I was surprised to see.
Yeah, interesting observations, and clearly a call to action and work to do still on ESOP understanding, both at the government regulator and also founder and employee levels too. Thanks, Kim. And May, your observations, please.
Thank you. I have to agree with all the panelists, your observation. I think it is a promising result. As a sector, we're definitely growing steadily and increasing maturity. And as a payment person, I'm very pleasing to see that payments wallet and supply chain type of fintech is still the most popular one and is raising capital. And the other thing is also promising to see that the growth of diversity and the code, but there's more work to be done. So with the headwind ahead us, keen to explore further with the panelists today of what are our collective roles and duties to grow this fintech sector and expand overseas, and what would the impact to our macro economies and in these uncertain times.
Thanks, May. That's right. We've certainly seen steady growth of post-revenue fintechs, which is phenomenal as well. And the number of paying customers has continued to increase, as we mentioned, with 45% reporting more than 500 customers, and that's up from 41% in 2021. So a question for the panelists is, when we think about that headwind of that macroeconomic turbulence that May's just mentioned, what are the key factors that you think that fintech should do more, less of, or differently to retain that growth trajectory? Dominic, I'm going to pose this question to you first, please.
Thanks for that. Look, I actually heard, I saw in the trending data, and also have heard around the traps about fintechs competing with fintechs. I actually think the future there is more co-opetition, where the fintechs themselves have an opportunity to break more into the incumbency. So, for example, in the banking sector, where we operate, 85% of the market is dominated by the big four incumbent players. And so if the fintechs are competing with each other, then they're going to be sort of battling over that 15%. What we really want to see more of is battling with the incumbents, so that we can reduce the market share of a very few players. Now, it's actually quite similar across other sectors of fintech, whether you're looking at payments or lending or other sort of, I guess, subsectors. And so I think that's sort of one of the things that we'd like to probably encourage and see more of, the fintechs helping each other to partner, to grow, and to provide a more competitive environment against the incumbent players, because that's really where the growth is to be found.
Well said, Dom, and spoken with experience, I know. And Kim, your thoughts on this question? What could they be doing differently, or more of, or less of? Kim?
Hi, sorry. Are you there?
Yes.
Yeah, I think similar to Dom. I think you've got to keep focused, right? Like, even though the capital markets around us are changing and access to capital is becoming more expensive, the problems that we're solving aren't really shifting beneath our feet. And if you're trying to build a generational company and you're trying to solve a problem for the long term, then markets will go in cycles, cash will become cheap one day and will become expensive the next day. So I think we need to focus on, what we're trying to do and what does the company look like in the next 5 to 10 years, rather than what does it look like in the next 12 months, and try to focus where needed, as well as, capital constraints often breed creativity. And I think Aussie companies are really good at being creative with less funding. So yeah, I think it's all good.
Indeed, that entrepreneurial spirit really shone through over the last 18 months. And May, what are your observations consulting and living and breathing this ecosystem?
Yeah, so first I would like to call out the age of the fintechs are really getting older. So 2/3 of the fintechs are now over 3 years, and almost 90% of the fintechs are over 2 years. So fintech should take this opportunity to focus on running the business financials and the economics. So lengthening the cash flow runway, focus not only on the top line and the bottom line, how to optimize the operation costs so that it's not going to be hindering when you moving from startup to scale up or scale up to grown up. So that's first. And then second, I agree with Dom, more collaboration, partnerships, support each other, growing the size of the pie, not only just the slice of your pie. And then thirdly, be creative of your talent strategy. And how are you going to attract the talent, retain talents, think outside the box. Again, back to the collaboration. So yeah, so these are 3 things for me.
Great 3 takeaways there, May. Moving on then, compared to last year, the percentage of local fintechs generating revenue from overseas has remained steady. But interestingly, local confidence has actually waned around Australia's competitiveness in the global fintech arena. However, what we found is this local perception contrasts with anecdotal evidence from overseas investors and fintechs that Kim actually mentioned earlier, and for whom Australia's fintech sector and market opportunity remains highly attractive and competitive. I guess a question now I want to pose to, firstly, David from Austrade is this the time to expand overseas? And what do you see are the key success differentiators for us?
Yeah, thanks, Malia. Look, I think I probably just want to make sure we don't gloss over that number of 40% of fintechs are earning revenue overseas. That is a huge number, right? Like, we'd be hard pressed to find any other segment of the Australian economy where 40% of the companies and businesses are earning revenue overseas. So I think that kind of lends itself to the fact that Australian companies by default, or Australian fintechs by default, are building solutions locally, but really for a global market from the onset. And so it was interesting to see that the confidence had waned, but in fact the penetration in terms of the revenue earned overseas stayed the same. We certainly see Australian fintechs are competing. The ones that actually are having the success realise that it is an investment in terms of your international agenda. So they take the time to actually understand the market, understand the nuances of the market, understand the nuances of the customers. They're not just trying to bring a product that was developed for an Australian audience or Australian customer segment into a market, but they're actually trying to make sure that they adapt that for the market. And they also build a pathway to entering that market. And Dom mentioned earlier around collaboration. And I think the ones that succeed are the ones that develop long-term lasting partnerships in those overseas countries that help them build a sustainable path to enter. And we've seen lots of case studies of Australian fintechs, and we've got some on this panel that are doing great overseas in very tough markets like the US and the UK. So I think it's, while confidence may be down a little bit, I'm a little bit surprised because I think Australian fintechs are doing great across the global stage.
Certainly, the data talks to what's actually happening. So an interesting aspect for us to think about and observe, given that confidence has dropped, but seems to be different from an anecdotal perspective and some lived experience. And so with that lived experience in mind, I would like to just bring in Kim to share her insights and thoughts. And having, I know she's just actually recently landed back from the UK. Kim, what are your thoughts on this?
Yeah, I think the confidence factor is probably more forward-looking than it is like in hindsight or backward-looking. The thing about international expansion is it becomes one of the first things to go under scrutiny when you're looking at extending your runway and reducing your operational costs. So when cash is expensive, then it becomes one of the things that you kind of think really heavily about before going into a region and possibly spending a lot of money on a market entry. A couple of things. I think the exciting thing is for companies like Mr. Young, where we've got global competitors, and same as every other fintech in Australia trying to expand overseas. All startups globally are reviewing their international expansion strategy. So it's not just us operating in isolation, because it's more difficult for Aussie companies to get funded in the early days compared to our US counterparts, for example. We tend to have capital efficiency in our DNA a little bit better. And I think that DNA teaches us to do more with less capital. I think to give female founders a plug, like females are typically run even more efficient businesses because it's even harder to get capital in the early days. It's even more in your DNA to be able to do a capital efficient international expansion strategy. So I think you've got to do it. You just have to think about how you do it, as opposed to just, you know, in the bull markets, you can kind of be a little bit more experimental and a little bit more aggressive. Secondly, I think to flip it the other way, it's likely that overseas competitors don't actually think about coming to Australia. So if you've got a great business in Australia and a great business in your home court advantage, there's less likelihood that your overseas competitors are going to enter this market because they're thinking about their international expansion as well. So you kind of don't have to defend your territory as hard whilst trying to plan an expansion strategy overseas that makes sense. So yeah, I think we will actually do on a global stage pretty well in these times, because I think it's more something we've had to do in the past and something that we can fall back on pretty easily.
Indeed, thanks for sharing those actual lived experiences. And Anthony, I wonder if you've got some observations on this question as well, given your Visa's obviously a global company and you're working with a lot of fintechs. What are your thoughts around, is this a good time to expand overseas, and what observations have you been seeing?
Yeah, I mean, certainly what we've seen recently is a real focus on the core markets that those fintechs have established themselves in. So maybe they're at this moment in time really focusing on those kind of areas before moving into that expansion. But again, you know, ecosystem, we're a network organization. What works in Australia often works really well in the New Zealand market, in Singapore, UK, Canada, US. So there's some immediate opportunities for successful fintechs with great solutions to then delve into that expansion into other markets. And a lot of the customers that we support are really around how do they then quickly evolve from an Australian specific fintech into a bit more of an international footprint.
Indeed, and Austrade does some great work helping with that. Are there any aspects you want to mention just to close this overseas expansion topic out, David?
Yeah, no, thanks, Malia. I think I might actually just contrast a little bit what Kim was saying, in that we've actually seen a pretty significant increase in the interest of Australia now as a market from foreign players, foreign fintechs. And we saw that at Intersect, right? We had large delegations that were coming in from Singapore, from the UK, from Ireland, as well as other parts of the world. And so, you know, maybe that confidence that we were just referring to perhaps is also perceived around, we're seeing maybe greater competition here in the Australian market. And I think that's probably just a testament to the fact we've climbed up the fintech rankings globally. We're now 6th in the world. We've done a lot to promote Australian fintech and Australia as a market. So we're starting to see a bit more interest from foreign companies.
That's right. And I guess that also flows into a nice segue of what we're seeing in the capital raising in the sector as well. It's continued to grow steadily despite the market conditions we've seen ourselves in for 2022. And perhaps that's because investors are increasingly understanding the importance and the potential of fintechs. And as the sector actually moves being more mature and also seeking alternative funding strategies. But if we reflect on the fact that the funding landscape is shifting, we've heard some of those reasons already. This year's qualitative interview process with fintech founders and investors has suggested that investors are reevaluating the market. and they are proving more hesitant to provide, especially larger rounds of funding. So a question I'm going to pose first to Dominic. What do you see happening in the capital raising landscape over the next 6 to 12 months? And how should fintechs respond? And Dominic, that's from your own experience, but also having now set up your own family office.
Yeah, look, I actually think that the venture capital market and the broader capital market has evolved significantly. So, just a few years back when we saw the formation of, Square Peg, Blackbird, Airtree and others, the entire market would have had less than, say, $700 or $800 million available as a capital pool. Whereas we've just seen in the press recently that just one single venture capitalist has raised $800 million for their next fund. So what we're seeing is that the market is maturing and there is more capital, but you need to contrast that with the fintech market and the startup ecosystem evolving. So those venture capitalists don't just fund fintechs, they fund all startups. And as the startup ecosystem has become so much bigger and so much more demanding of capital, particularly in fintech, where capital and having that very strong access to capital and runway is really important, we're probably outpacing the growth of just the venture capital market itself. So I mentioned in the intro some of the other type of capitals that we're seeing that has also been evolving. Things like crowdfunding, which was, which regulation was introduced to make that possible in Australia. We're seeing a lot more interest in angel investing in those very early stages. Yes, the venture capitalists and the private equity firms are investing a bit earlier than they have in the past. That's definitely a trend, but they can't invest in all of these new companies as these new companies are evolving and maturing. And so you need to fill that gap with crowdfunding, angel investment and seed capital. I mean, personally in the family office, for example, we've probably seen, I would say, a dozen or more seed capital funds launched just in the last couple of years. So, sort of during the COVID pandemic, the desire for capital and the need for growth capital is always there. But the desire for seed capital and to get started with more and more funding has actually increased as well. So, those alternatives that you mentioned, I mean, things like, for example, debt equity funding was not something that was really big in the Australian market, but that has grown significantly. We only have one secondary fund in Australia, whereas internationally secondary capital is, where founders are exiting or employees are cashing in some of their chips. That is a really buoyant market internationally, and in Australia it's just almost non-existent. So, I think, again, as the market matures, that the reason why we have two different conversations in the media and two different conversations happening in the industry is that, yes, there's a lot more capital and yes, there's a lot of alternatives. But at the same time, the startup ecosystem and particularly the fintech ecosystem is growing at a rate of knots that is outpacing the rate of capital growth. And we just need to balance the ledger over the coming, 5 to 10 years.
So well put, Dom. Thank you for that. And Kim, again, from your lived experience, what do you see happening in the capital raising landscape over the next 6 to 12 months? So looking ahead, and how should the sector respond?
I think the next 6 to 12 months, I think most people would agree, will likely continue to be pretty bleak on valuations, and that's just reflective of what the public markets are doing, especially for growth rounds, and not really pre-seed or seed stage, but more later stage, larger rounds, like you indicated before, Malia. At the same time, though, I think the Aussie VCs especially are not doing a bad job at all at raising capital themselves. So they're almost been quite productive over the last 3 or 4 months, where they haven't been investing as much, but they've been busy raising their funds and making sure they've got cash ready to go when the markets turn around again. So I think there's lots of, it's not going to be forever. It's just a conversation around valuations at our stage at the moment. On that, like growth round startups typically want to avoid down rounds on valuation. So I think from a tactical point of view, it's nice to say, extend your runway as much as possible, et cetera, et cetera. But I think the way that we're thinking about it is you need to give yourself time to grow into your valuations at lower multiples compared to multiples that were raised in the later stage of 2021. And so extend your runway for as long as you need to get to that higher revenue number to be able to justify higher valuations than previous rounds. And that could be a short time for some startups. It could be a longer time for some startups. It's not really about the non-existence of capital or the lack of capital. It's more what valuation are you willing to accept, and how does that play out compared to the public markets at the moment. I think pre-seed and seed stage startups will be okay. I think there's still a lot of activity at that level, and there was a question in the Q&A about Paul Bassett saying from Square Peg that they invest early, and there was a pretty active LinkedIn thread that was going on about them investing early. I went to their Founders Summit in Tel Aviv recently, and I met lots of startups that they invested in pre-revenue, and some of them even like not completely pre-product, but like relatively early stage in product development, which I was super impressed to see and really surprised by, actually. So they just, like everyone in the space, they see a lot of opportunities and they invest in very few. So it feels like they'll probably turn away opportunities and they might say, oh, it's too early for us, or etc. But they do actually invest pre-revenue and sometimes even pre-product, and mostly off the back of founders that have real credibility in that sector, and real experience to be able to pull it off. When I said that, it's harder to get cash.
Kim, I'm just going to pause there. Amazing insights. We're just going to move through, if that's okay.
Oh, good.
I guess what I want to move on to is the sectors within the fintech. So Australia's largest fintech segments continue to be payments and wallets and supply chains. And the census shows that these sectors are the most successful in capital raising as well, with 21% of this segment raising more than $100 million compared to the 13% sector average. May, I want to bring you in here. Why do you think this is the case, and what can we expect next?
Yeah, thanks, Malia. So first of all, no businesses or individual lives do not need payment capabilities. The payment industry is going through a period of vertical transformation with profound changes occurring across the sector. Payments lie at the heart of commerce, not only just e-commerce, and the digital economy with the global payments volume of US 240 trillion, almost three times of the global GDP. Hence, you can see that the total addressable market is enormous and extremely attractive. So looking ahead, I think there's 4 things that we'll be focusing on. The first that is, in the post-COVID world, connected commerce is definitely driving the digital economy. We will see more new payment propositions in the market, helping to connect merchants and the consumer directly in a more efficient, trade, convenient, safe, and faster way. Secondly, is a value beyond payment. So it's front of mind in many of the payment digital disruptors, looking beyond the transaction and towards to the holistic customer journeys before and after payment. Thirdly, is that especially in these local markets, unlocking the potential of CDR and the real-time payment to serve your customer better through the account-to-account opportunity. Last but not least is that the power of the embedded finance will be unleashed by the embedded payments.
Great insights, thanks, May. And Anthony, why do you think this is the case with these fintech segments, and what do you think we should expect next?
Yeah, Malia, I think my observation here is that fintechs are setting the pace for industry innovation, and there's a real appetite to invest in those companies as they grow. And what we see is really raised customer expectations. The bar has been lifted in relation to what consumers and small businesses expect when they onboard themselves to a new financial instrument. So let's take Dom's Up Bank as an instance, where that onboarding process has been refined and improved to make it as easy as possible. And in many ways, it's much better than what we've seen from traditional banks. And we saw that repeated with 86-400. We saw that again with Haybank in what they launched. So that ability to onboard customers really seamlessly and easily, help them through that eKYC process. So that focus on improving the overall experience and that personalization of services for consumers as well. The next one is something that May picked up on really, which is around embedded finance. So think of that as weaving payment products into the fabric of non-financial experiences. So whether that's adding a debit card to a crypto exchange or a prepaid card to a HR platform, or even a credit product that's being intertwined into an online accounting platform, what you're then seeing is traditional financial products embedding themselves within large customer platforms. So we see a lot more growth in that particular space going forward, and seeing those transactional banking services being further embedded into solutions that many consumers and small businesses are already using, and then it gives them more opportunity to spend more time on those platforms. So that's where we see a lot of that fintech innovation coming from, and that's probably why there's a lot of interest and also investment into this particular sector at this point in time.
Well said, Anthony. So much opportunity and so much exciting innovation around technology. I love it. So to keep the industry thriving, we talked about how respondents believe the new federal government should focus on greater founder and startup support via incentives, supporting a greater capital flow for investment, and arguably, that could include ESOP as well, and greater support for tax incentives for Australian-based R&D and commercialisation. David, on behalf of Austrade, what do you see as what's the role and commitment of Austrade?
Yeah, thanks, Marley. I'll try and be brief because I recognise we have a lot of time left. But I was really interested to see that 79% of the respondents are utilising the R&D tax incentive. That's a great number. I'm really keen to make sure that I can't comment on what the federal government should be doing in terms of new initiatives, probably a career-limiting move for me to do that. But I think I'm really keen to make sure that fintechs can make the most and utilise the services and the other things and the other programs that government has. And so Austrade is one piece of that, right? Like, we've got a large international network. We work with fintechs across the whole journey, their whole international expansion journey, whether it's educational webinars on various markets, boot camps that we might be running as a cohort program, of which we actually have our 4th New York fintech cohort going through a demo day tomorrow, which got 7 fintechs going through missions to major activities. We've got 60 odd people in Australian delegates in Singapore for a Singapore FinTech Festival from 35 companies right now. And then all the way through to more advanced companies that just need that more one-on-one support. And also we have, the Export Market Development Grant, which I'm really keen to make sure we increase the utilisation of that for fintechs. And so we're keen to do some more education and awareness around the eligibility for fintechs to utilise that as well. So yeah, I think in a nutshell, there's lots of services and initiatives that fintechs can use. Let's make sure we get the most of them.
Absolutely. Thanks, David. We've also talked about that attracting and retaining talent remains a top priority, not just for the fintech industry, but industry in general. And I'm seeing a lot of questions come through the Q&A around the talent agenda and some asking for some feedback from the panelists. I guess, Kim, I want to bring you in here again. Some incredible lived experience that you've lived very vocably in the public arena on the last 12 months as well. And what are the lessons you've learned, and are there any silver bullets that you could suggest to win talent in this market, and how can the ecosystem best respond in just a minute or so, Kim?
I think salaries have definitely cooled off since 2021, so I think we're in a better spot now than before. The only silver bullet that I could come up with here is probably just momentum. And once you've established your values, thinking about leading indicators to help your team understand that the work they do today is actually creating progress for tomorrow, and momentum goes a long way in being able to carry culture and retention and talent.
Great observations. And May, any observations from you?
Yeah, I think like similar to the way of approaching the technology solutions built by board. I think that fintech is not necessarily to build a team on day one, but it's harnessing the ecosystem, looking at the partnership and the collaboration with your supply chain, with your partnership, even your clients, of how can you optimize your talent strength. Yeah.
Great. And then this is the first year we've added environmental, social and governance questions, and only 30% of fintechs currently measure their business sustainability or carbon footprint, and only 19% have a sustainability goal, with 27% having implemented some sustainable business practices. Anthony, what do you see as key drivers for fintechs to take this on as a priority?
Malia, what we're seeing here is a real paradox from where I'm sitting. And what we know is that consumers are looking for tools to measure, track, and then offset their carbon emissions. In fact, some research that Visa conducted with YouGov identified that 52% of consumers will actively switch banks in order to find a financial product that will help them measure, track, and then change their payment experiences in order to make sure that they are offsetting their carbon. But the reality seems to be that when we look at the fintechs themselves, even though they might be providing those types of solutions to their end users, when it comes to measuring it internally, then when we're not quite seeing that same level of adoption, unfortunately, I guess it really comes down to the way we then ultimately link things like incentives and grants to that ESG agenda and targets going forward to help promote that a little bit more. So I think overall, what we saw from the census this year is perhaps not as much movement in this space as we might have thought was existing, even though there are a lot of fintechs that are focused on helping consumers and small businesses with their ESG agenda. Perhaps the fintechs themselves aren't quite necessarily fully on board yet. So a little bit more work for us all to do there.
Indeed. Excellent. In the final few minutes, I'd like to get reflecting on all these new challenges and these new opportunities ahead for the sector. I'd like to reflect on each of the panelists one piece of North Star advice that you'd like to share with us all. Dominic, we started with you. Let's bring you in again first.
Yeah, thanks. I mean, my view is that given the ascension of fintech over the last 7 years that we've seen come through in the data, what we want to do is leverage the Australian talent, the ingenuity, the creativity that we bring to the rest of the world. Others internationally have recognised that. That's why we're seeing other international fintechs launching in Australia. That's why we're seeing Jack Dorsey out here hiring up talent. I think we should be focused on the ingenuity, the creativity, the disruption that Australian fintech and fintech leaders actually bring to the global game.
Amazing. And May, your North Star?
Yes, time can be tough ahead of us, but as a sector, we are well positioned to ride out the common challenges. So collaboration, strongly encourage the entire ecosystem, including government and regulator, to support each other, continue to grow, expand internationally. And fintech, it is the cornerstone of our digital economy beyond borders.
Wonderful. Thank you, May. And David, your North Star for the audience.
Dom and May have actually taken both of my first and second, but look, I'll just reiterate that. I think Australian companies can compete internationally. And look, I'll probably maybe just summarise by saying you don't need to go it alone. There's an incredible community here in Australia, and there's lots of services and support and people willing to help support you, both domestically and internationally. So collaborate and leverage those that are willing to help.
The key word, collaborate. Fantastic. And Kim, your thoughts?
Mine's probably more directed at founders or entrepreneurs, but this is really hard because we're optimists in the game. My mantra at the moment is just plan for the worst and hope for the best and be ready to seize the opportunities when they come up.
Amazing mantra. Love it, Kim. Something for us all to remember. And Anthony, your North Star.
Yeah, look, I'm going to echo the sentiment from the other panelists, which is this is a team sport. There's no need to go it alone. Form great partnerships with organizations that can help you. You don't need to build it all yourself. partnering with others that have already gone down that road and developed those solutions might be a quicker way to market. And then finally, make sure that the problem that you're solving is worth solving. Are people going to pay for it? Are you going to get the return ultimately that's required for the problem that you are providing a solution for?
Fantastic. We are at the top of the hour, and I know that and along with all the panelists, are incredibly excited about what the coming year in fintech can and will bring. It's not going to be all roses, but we're all in this together. The sky's the limit, and fintech is clearly here to stay. I'd like to conclude by thanking each of our panelists for what has been an interesting and thought-provoking discussion. I'd also like to thank Minister Husic, EY Sweeney, our Market Research Division, Fintech Australia, Austrade and Visa. For those questions that we didn't get to today, there are a lot in the Q&A. We will follow up after the webcast. We hope you enjoy reading the census report that you'll receive today. It is going live following this webcast, and learning about the dynamic fintech industry we have here in Australia. Please take a short moment to complete the questionnaire, which is about to pop up on your screen. This will greatly assist us with improving our future webcasts. Thank you for joining us today. Take care and goodbye.